Hello everyone, let's quickly go over the December FOMC meeting that happened on December 18th. During the meeting, the Federal Reserve lowered its key interest rate by 0.25 percentage point. This is the third consecutive rate reduction, and so far for this rate cycle, benchmark rate has already been deducted by 1% since September. And of course, the first rate cut was a jumbo-sized 0.5% rate cut. So currently, after the December FOMC meeting, the rate is now in a range of 4.25 to 4.5%, and it's a level last seen in December of 2022. So how is the future rate projection going to go? This chart shows you the dot plot, but what's very interesting is that the gray color represents the dot captured last meeting in the September FOMC meeting, and the yellow dots represent what we just had for the December meeting. And right now, the Federal Reserve is only anticipating 2 more rate cuts until the end of 2025 based on the median level of the dot plot. And there will be 2 additional cuts in 2026 based on the median value, and there will be 1 more additional cut in 2027. And the long-term so-called neutral rate, if we look at the long-term, and the median is currently at 3%, and that's what we call the neutral rate, and it's actually up by 0.1% compared to September at 3%. Now let's look at the economic projection from this FOMC meeting. The Fed has also hiked its 2025 inflation forecast, showing in the red rectangles over here. The 2025 column is here, and these are the median values. As we can see, the PCE inflation, they used to be projected to be 2.1% in 2025. Now it's up to 2.5%, okay, 2.1 to 2.5. And the core PCE inflation is increased from 2.2 in previous meeting, now up to 2.5. That's a very, very big increase in Federal Reserve's inflation projection for 2022, okay? And also what we have seen is that the unemployment rate is now slightly lower. It was 4.4%, now it's 4.3%, and the economy, the GDP, is slightly higher, okay? It used to be 2%, and it's now 2.1%. We can kind of tell Federal Reserve's projection is based on kind of their projection on Trump's administration because of tariff and stuff. They think and probably going to contribute to higher inflation, but because Donald Trump is pro-business, it's probably going to boost the GDP. Okay, again, like I said, the neutral rate can be seen over here. Fed funds rate long term. Okay, it used to be 2.9%. It's now up to 3%. And let's take a look at market reaction after the FOMC meeting. The fact that the Fed is projecting a higher inflation and higher interest rate for longer, it's causing a lot of discomfort, okay? And the reaction is very negative. As you can see, the NASDAQ 100 is down 3.17% today, and S&P 500 is down 2.3% today. And because this is what everybody is feared about, which is the Federal Reserve turning hawkish instead of being dovish as originally planned, because the hawkish Federal Reserve will probably not be able to support the current high valuation that some of the largest technology stocks have. For example, the Magnificent Seven currently have a PE ratio of 68 times. And let's take a look at the market projection or betting in terms of where they think the Federal Reserve monetary policy or Fed funds rate or the interest rate is going to be. So after the FOMC meeting, the market is actually expecting a more hawkish Federal Reserve than the dot plot, because the market is now projecting 0.25% rate cut before the end of 2025, which is December 2025. And that 1 cut is happening in May 7th meeting of 2025. So pretty much from today to end of 2025, the market is projecting 0.25% cut. Thank you very much.